Welcome one, welcome all. I almost say DeFi when airdrops, but this is the Node Network, little throwback. A lot going on in the markets today. I am Myke, also known as Veteran Crypto, here Monday through Friday, 9 a.m. Pacific to noon, and on the East Coast, noon to 2. If you care to join us, each day we've streamlined things a bit here. We actually moved, I'll share that real quick. We moved a bunch of our, let's add David does this. So we moved a bunch of our channels. We kind of split things up, so we streamlined things a bit. So if you want to find us on YouTube, our crypto content is at the Node Network, all one word. And now we just have the Node, which is the show you're watching now, Monday through Friday, 9 a.m. Pacific, and Crypto and Chill, tonight, Tuesday, and Fridays at 5 p.m. And we're going to be changing up the model a little bit to bring more value to the community. So, everything else, the Red Pill and Sovereign Soil has been moved to Unfiltered and Sovereign, and all of the music has been moved over to the One Hatter, which is the music channel. So we split things up, works better for the algorithm. It just makes it to where it doesn't penalize us for people that are looking for our crypto content and not clicking on other content. So just wanting to make sure that we can get the word out about what it is that we do here, because we're one of the few that built out a website and give pretty much everything away for free. So if you want to come to the node.pro, this is where you can learn about crypto, DeFi, hot and cold wallets, advanced strategies like looping and interest rate arbitrage, all of those sorts of things that David and I are always talking about here on the show. This is where you can learn it for free. Other people, they charge for this anywhere from $100. Some people tens of thousands of dollars, for more of a bespoke experience where it's one-on-one. But we offer it for free. So there's no reason why you can't avoid a lot of the mistakes that a lot of us made when we first got into these markets. And God knows I've made a bunch. But luckily I've navigated the super expensive ones. Also for free, we give away a community. So if you want to come into our community tab, it's very Discord-like. I think it's much cleaner, much better, not as confusing. So, jump in here, join the community, chat with people, ask questions, learn, and it's a great group of people in here. So, go ahead and jump into that. And then, of course, the Intel library. This is incredibly valuable. So today we're going to be talking about Cubic and Quant. Those are going to be the deep dives, but we have done deep dives on many of the top projects by market cap and some of the new projects, some of the smaller market cap, potential gems, as well as some stocks. So if you're thinking about investing in any of these assets, this is a great place to come. And again, for free, go through the deep dive. And these deep dives are not, they're quality. You can go through, there's a quick video. It's like 8 minutes. Total investment, you're looking at about 15 minutes. About an 8-minute video, you can read through, a lot of the data and information about what is it that they're proposing that they're going to build, what pain point they're addressing, what is their market, what is their use case, as well as the token. And if the token has value capture, what part does the token play? Because that's what you're investing in, is the token. It doesn't matter how successful the company is. Potentially, if the token doesn't have value capture to where there's a direct connection to the fees and the revenue generated by the project, potentially you're buying speculation, you're buying hype. You're hoping that there's enough excitement about the project that people that don't know better are going to come in and pump the price for you so that you can use them as exit liquidity. Let's just call it how it is.
Yep.
That's what crypto has been up until now, for the most part, is pure speculation, and a bunch of people, in influencers and content creators included, hyping projects, hoping the price will go up so that they can sell at a higher price than they bought at. So we're not like that here. We're here to tell you the good, the bad, and the ugly about every.
Myke, you know why we're not like that? Because we don't get fucking paid. Okay.
Yeah.
So, that's why. Because we can say whatever we want to say. Because we have no conflicts of interest. It doesn't matter to us if, a project XYZ, insert name of project here. It doesn't matter if they don't like what we say, because they're not paying us.
Exactly.
So we can say what we can seek truth. And that's what we do with these Intel library dossiers, man.
Did the X login get fixed?
I removed it. So I need to, I'm going to be working on that. That's on my list. I've got, a bunch of stuff a bunch of upgrades, man, are coming this week, dude. So I've got some really cool stuff up my sleeve, bro. And what we're going to see pretty soon is this app is going to launch on Android. So I don't like the way these images look. I'm going to get rid of all these images.
I actually kind of like it. That's what I was going to comment on. Is I like how clean it looks.
Oh, okay. All right. Well,
I mean, do you? I mean, you're the mastermind behind it, but I mean, I just liked how clean it looked. But
I don't know, man. I think it could be better, because when you land on the homepage, you don't immediately know, like, okay, like I'm looking at a screen and a chair. Like, it doesn't quite, it's got to immediately say, like, this is what we do. And I don't think that's really what it says.
Gotcha.
And I got a bunch of upgrades coming. I'm turning the Node network into a full-fledged app. So think like X plus Telegram, but all around the Intel library. So chatting on an X/Instagram app, but with the Intel library deep dives. And dude, I'm going to be upgrading all the courses for, basically those courses. I built them in like 2024 and 2025.
Yeah.
And like finalized them like earlier this year in 2026. And so now there's a bunch of models available to me that are so much smarter than the models that I had access to, 18 months ago. So I'm going to be doing a big upgrade to all of those courses. So the DeFi High School, the DeFi University, the Bitcoin University, I'm going to write a bunch of content, courses on options. And then I'm going to write, an entire thing on concentrated liquidity provision, because I get so many messages from friends of mine in crypto who, ask questions about providing concentrated liquidity. And I know that there's a lot of other influencers out there. I'll call them influencers. I don't think of us as influencers, Myke. I think of us as educators.
We're not trying to influence anybody. We're just trying to educate you.
In fact, don't listen to me. I don't care.
No, I mean, honestly, we genuinely just want to educate you. It's what you do with that education. If you decide that you want to continue on with it and do your own research and expand on it, that's what we're hoping to do. Is we're hoping to plant the seed. We're hoping to onboard you into crypto, give you resources that's going to make you more profitable, and run with it. That's what we're here for. Me and David and Jeff personally do not care what you invest in. It affects us in no way whatsoever. If you want to buy XRP, don't do that.
Don't do that.
If you want to buy it, it's your money.
Look, man. So, Myke, a client of mine was sending me some text messages this morning, and I called him a retard.
Because, dude, not so, David.
It is. He keeps sending me text messages about XRP, and it's like, dude, like, for some reason, it doesn't quite click that you need user growth and user adoption. Those users need to drive real revenues, and those revenues need to accrue to token holders. And XRP, look, man, it doesn't meet the trifecta.
Now, Ripple had a stock. I mean, I tried to invest in the Ripple.
That's not what XRP, the token, is, though.
No, it's not. But yeah. I tried to invest through Link2. They went bankrupt, but they were offering a.
That doesn't surprise me.
I know. They were offering a pre-IPO. So when I sold all my XRP, it was like $1,500 or something like that. I bought, the pre-IPO, and and I was still bullish on Ripple. I saw what Ripple was doing, where they were buying up Medico and all these other companies and stuff like that. And the Ripple, the company Ripple Prime, that has nothing to do with the XRPL and XRP. They are the key custodians for the DTCC, but the XRPL and XRP is not being used yet. And I say yet. There's been no announcement. There's no plan that has been announced that the DTCC for tokenized stocks and things like that is going to be using the XRPL. That could change. However, as it stands now, the only thing, don't listen to the maxis out there, because I've seen a million posts and I try to freaking beat them with a stick, but there's too many of them.
I know they're everywhere.
Saying that Ripple and XRP, boom, we're going to the moon because Ripple and XRP is working with the DTCC. No, they are
and
not.
That's what my client was telling me this morning. He's sending me these messages about, insert name of institution here is working with Ripple. And it's like, okay, well, what does that mean for you if you hold XRP, right? Or XLM for that matter? Like,
or 95% or more of the tokens that are
I think it's like 99%. I think it's like the vast, vast majority have no value capture model at all. And I think most of them are just
don't earn fees or revenue.
Right. And have no real users either. I mean, how many chains have we seen, just become defunct year to date? And how many chains are we seeing right now that are basically ghost chains? Think Berachain, for example. That's a great example, right? Berachain, big hype, big launch, and then nothing but down into the right. So, and also, who wants to provide liquidity or do anything on a chain named after bears? I certainly don't. I want to be on the bull chain, not the bear chain. So
I'm not sure what DCA and Prey is saying here. That's why XLM is greater than XRP. Stellar is growing.
But I would actually push back against that.
Well, no, he's right. I mean, Stellar is seems to be doing a lot more. I mean, the DTCC has announced that supposedly in H1 of next year that they're going to be launching on XLM. I mean,
but even that, Myke, maybe sometime in the future, hopefully, there could be a launch. Maybe
I get it.
I don't know.
I get it, but at least the DTCC came out and said that, as opposed to what's going on with Ripple and XRP. But DCA and Prey, you got to think about this as what does that mean for the XLM token? Because it still has it possesses zero value capture. It's basically a gas token.
So what I would recommend for DCA and Prey to do is to hop into the Intel library and just watch through the video content on XLM Stellar. And what you'll learn from that is there is zero value capture, okay? Like if you hold XLM, there is zero value capture. And also, you've got to learn about what the transaction volume is on Stellar, okay? Where is that transaction volume coming from? It looks like there are two companies that drive all of the transaction volume on XLM. And they're like, it's bullshit companies, dude. Like it's like a shipping company and like a video game company or something. And so all that transaction volume, it's basically two companies that drive all the volume, and that volume accrues zero value to the XLM token. So what exactly are you holding if you hold XLM? You're holding a big bag of nothing.
You're holding a gas token and I've done the math at max TPS. What was it?
That's for XRP, but probably for XLM too.
They're both very similar. But XLM, I did the math, and it was over 5,000 years that it would take just to burn at max TPS, burning 24/7, 365.
Hey, but don't worry about that. It's going to $10,000, man.
Well, no, but to burn 10% of the supply, it would take over 5,000 years running at max TPS 24/7, 365.
Never going to happen.
Never going to happen. It's not, it's when people realize that the majority of crypto is overpriced, overvalued, like Ripple or XRP, excuse me, has a $70 billion market cap. For what? What exactly is supporting that valuation, basically.
I mean, basically just a massive holder base. That's
Yeah.
basically it.
And
People
when
who,
people wake up and start dumping,
I mean, I just am curious to find out how many people are massively underwater on their XRP holdings and XLM. And today we're going to learn about, a couple of other ISO coins, Cubic and Quant.
well,
And
quant was a big one.
yeah, man, I think what we're going to, without knowing, I know nothing about Cubic or Quant. The only thing that I know is they're associated with that ISO narrative, which to me immediately tells me they're probably Fugazi coins. But I'm really curious to learn more about them today and learn about, look, we focus on the trifecta. You need users and user growth. Those users need to drive real revenues for the protocol or the coin or the token. And those revenues need to accrue to token holders in some way. And I think what we're going to learn is that, Cubic and Quant don't satisfy any of those three items.
Well, check this out. I found this morning. So this is Dromos Labs that created Aerodrome and Velodrome.
So what is a Dromos again, Myke? Can you tell me?
Gateway to hell, brother. And
yes.
Hell yeah. I'm in. So
who names their company after the gateway to the underworld? That's what a Dromos is.
It just sounds cool. All right, well, check this out. So you can do 30, 90, and 180 days, but this is net token value flows. So, green is a token's direct claim on protocol value, fees, buybacks, and burns flowing to holders. So this is what we've been talking about with value capture. So GMX and supposedly Link.
Yeah, so here's the problem for me, bro. I'm looking at this and Dromos.kitchen. So I always think to myself, whenever I see information, about any crypto, DeFi, digital asset, whatever, verify, don't trust.
Oh, absolutely.
And so
I'm pointing this out, and then we're going to dig into it.
I saw this on X2. So I'm really curious. How did they come up with this? That's what I'm curious about.
Yeah, where are they pulling the data?
Yeah, exactly. So I can see it. I can see it for GMX. I can see it for GMX for sure. But Link, I'm not too sure about all that.
That's kind of was my thought too, because everything that I've looked at with the Link token is it lacks value capture, and that's what it's talking about here with the green. A token's direct claim on protocol value, which is the fees and revenue that we talk about. And that's, in most of these, like, Hype and Arrow and, a lot of these tokens that we've found with value capture, the predominant way that they give value capture, because they can't give direct dividends, because that would make them a security. And so the way that they've been doing it to circumvent that is buybacks and burns. And that's what you see on Hype, is 100% of the fees that are generated on the platform go to directly buy back the Hype token and permanently burn it. And that is what has been making it deflationary.
So Myke, you see where for Hype, it's got it looks like it's shaded. And then to the left of that little shaded area, there's a little eye. What is that eye? What's that eye say?
I tried clicking on it and it doesn't bring up anything new.
Yeah.
But it does say team unlocks are discretionary. No vesting contract. Actual claims 98% below scheduled model.
Okay. Not quite sure exactly what that means, but definitely worth digging into this for sure. Now, for GMX, though, I can definitely see the value capture for the GMX token, but haven't run the deep dive research on it. So, that might be, a decent, what's this? DEXE?
This is DEXE.
Oh, wasn't this in the top 20 recently?
Yeah, I believe so. And it's down to 58. I want to give credit where credit is due. It was who was it? Oh man, he's usually in the chat. Ginger Prince.
Yeah,
Ginger Prince pointed this out. I was watching Drew this morning, and he was saying that it was asking them, and they weren't answering him. He was asking, why it was down like 74%. I mean, are you able to find anything on this, David? Like, why did DEXE dump like well, let's measure it and see where it's at right now.
Yeah, well, I mean, if I had to just
Yeah, it's down
guess,
like 80%. Like, what the hell happened here?
yeah, let's find out. Why did it dumpy dump today? Well, if I had to guess, just taking a look at that chart, exploit or hack or team just stole all the money, or big token holder sold everything. Those would be one. Those my first three. Like just intuitively, that's what I would think.
That would be
So
that's a massive, massive dump. I mean, because this is the 24 hours. So over the past 1, 2, 3, 4, 5, 6, 7, 8, like 9 days. But this today is this massive dump. It pumped up and almost reclaimed what it lost at some point today, but then just fucking cratered.
So Grok gave me no information. Let me see if maybe Gemini will give me something.
All right.
But
So,
what we
so
yeah.
Crypto Dave, welcome to the channel, first of all. And I'm with you. I was buying XRP at 30 cents in the 30-cent range for years. I mean, I was in the top like 2-3% of token holders for XRP for a long time, like all through the last bear market. So yeah, I mean, if your average entry is 30 cents, I mean, take some profits. I hope you took some profits. I sold all my XRP around $2. But yeah, I mean, I hope you took some profits. And if you want to hold a bag in case it does do something, spectacular, awesome. But me personally, I got out of XRP. I see much better projects out there. But I'm sorry.
So there's significant opportunity cost in holding XRP too, rather than holding something like Bitcoin, for example. And look, I'm going to be completely open and honest here, man. Bitcoin doesn't meet our trifecta either.
Yeah.
But Bitcoin has something else going for it. It is the only truly decentralized digital commodity, the only one.
Mm-hmm.
So it's got a lot of people who believe in it. That's important. But XRP has none of that. So I'm looking over here for DEXI, for information about DEXI. And let's see here. On-chain analysts observed that millions of DEXI tokens were moved out of official team multi-sig wallets and the DEXI DAO treasury into fresh, unlabeled wallet addresses. Okay. And it's saying that that could mean that custody migration, could mean potential OTC deals. I doubt it. Let's see. It looks like they could have just been an insider cash out, man. So I'm looking for exchange flows. And
to be honest, I kind of want to buy like $100 or or $200 and
no.
No.
So that's a logical fallacy. So
I know, but dude, I did it with Soul. I did it with Soul, and
it's a different project. DEXI is not Solana.
I get that. I get that. And there's plenty that don't recover, but it's just the to scratch that itch, that gambler's itch. Because I'm just sitting on my hands right now. I haven't done anything in DeFi. I haven't done anything, in crypto really. I'm just waiting for October. So, it's just I want to do something. So, like I said, $100. I mean, it's $100.
No. Because think about the opportunity cost for that $100. If you buy, this, this piece of shit, this DEXI thing. If you buy this and your $100 turns into 50, well, number one, you're down 50%. So now you've got to double up just to get to break even. But number two,
I spent $50 on a lot worse things.
Well, but what if you take that $100 and you buy something that actually makes you money? And so you got a big opportunity. I like money. It's very nice. But I mean, dude, like, don't buy this shit. If anything, get short this thing, man. Like, it's telling you that it's going to zero.
Oh, dude, I wish I could have got short. I mean, look at this. I mean, if we would have looked at this, oh, dude, if we would have looked at this before all these red candles, we might have been like, oh yeah, this chart looks amazing. It's been, freaking, outperforming Bitcoin, and I mean, we might have identified this as a decent project, but yeah, fuck no.
No.
Well, it goes to show you, it's nothing is perfect. I mean, you're not going to be able to look at a chart and have a guarantee of a successful investment. Nobody has a crystal ball. you can all you can do is look at all the available data. Look at the charts, look at our deep dives, do your own research. That's all you can do in investing. Nobody has a crystal ball except Nancy Pelosi.
Yeah, no kidding. Seriously, man. But taking a look at Dexy though, didn't we run deep dive research on that thing? I
Let's
think,
take a
yeah,
look.
we did. We did. Yeah, on June 8th. On June 8th, we did. Let's go ahead and give Dexy protocol, let's give it a grade. Because I think, if memory serves, this protocol allowed you to launch DAOs, I think. That was the whole point of the DEXI protocol.
So
Yeah,
it's a decentralized autonomous organization landscape. It has transitioned from basic token weighting voting systems to multi-tiered professionalized governance frameworks. At the forefront of this evolution is DEXI Protocol, a Web3 governance infrastructure that provides a modular code-free library of smart contracts designed to facilitate the creation, management, and scaling of highly customizable DAOs. So yeah, it's basically a DAO builder.
Okay, and so we've seen a lot of problems with these governance tokens, and we've seen a lot of problems with DAOs. So, like, if a DAO owns a big pot of money, right? Then, and we saw this with, oh man, there was a Solana DAO where, it was Bonk. It was the Bonk DAO, the Bonk Treasury, where, some whale decided, hey, I can vote to give myself this big pot of money. How much would it cost for me to buy enough governance to be able to give myself all the money? And so for the Bonk DAO, what happened with that was one guy went in, bought $4 million of whatever the DAO governance token was for the Bonk DAO.
And then basically hijacked it.
He just voted to give himself all the money.
Yeah.
So it was like, okay, if I invest 4 million to then make 20, hey, that's a 5x, that's a 5-bagger right there. That's exactly what he did. So, but it's not just that DAO. Like, this whole model is fundamentally flawed. Like, you take a look at ENS, the ENS DAO, the Ethereum name service, the DAO owns like $400 million in liquid assets, but the DAO, it's like the governance token is worth less than half that. So you would think, oh, well, that might be a good opportunity. I can buy this governance token because the net asset value is double the current market value of the token.
I'll be honest, I do not like DAOs. I do not like governance tokens because retail are idiots, myself included. I don't think retail should be deciding what the hell goes on with the protocol and stuff like that. I think smart people that understand the shit should be the ones deciding.
So Myke, I just gave Dexy Protocol a grade of D. I gave it a D.
All right.
The only reason it doesn't get an F is because it's still not trading for zero. But yeah, man, it doesn't look good. It looks to me like insiders dumped. That's what it's looking like. Yeah.
Well, and Ginger Prince, just so you know, I don't know if you heard, I gave you a shout out because I saw you over on Discover Crypto, asking them, and it didn't. Before I left, they hadn't addressed your question, so I wanted to make sure that we addressed it here for you.
So look, whenever you see, a single session in crypto where a token is down 70, 80, 90%, like, how many times have we seen recoveries? Not very often. Not very often. You see a token dump 70, 80, 90% in a single session, that's your cue to get the hell out. Even if you've got massive losses, man. Like, even if you've got massive losses, it's better to get out while losing. Oh, I mean, look, it's horrible, but it's better to get out at a 70% loss than a 100% loss.
There's some of the stuff that I was holding, like Plume and Casper's, was the worst. I think I lost like 70% or something like that on Casper, but I got out, months ago, before it, kept dumping. So, I lost money, net I made money because of all the yield that I harvested and put in other projects. But, I sold at a 70% loss as far as the bag that I held.
So what helps people to avoid, generating losses like that is going through the deep dive research on these protocols. That's what helps you understand how these things, get users, drive revenues, and do they actually accrue value? Do those revenues accrue value to the token or not?
I'll be honest, I'm sick of just investing in, what looks to be solid fundamentals and solid projects. And I've shifted all of my focus to tokens that have value capture. Because to be honest, all the ones that we've identified that have solid value capture are the ones that have been outperforming the market through the bear market and outperforming Bitcoin even.
You see, you see what Jeff said in the chat, Terra Luna. So Mike, did you see that OpenAI? That's Scam Altman's thing.
Yeah.
That he named his next 3 models Terra, Luna, and Sol. A lot of people were so angry when that came out because it's like, dude, like, why'd you call it Terra, Luna, and Sol? Yeah.
I've never heard of Lorenzo protocol. Have you?
I've started to see the bank token. I have started to see that because didn't it put in a massive pump? Yeah, it did, man. Oh my God.
Go ahead and share your screen.
Yeah, so let's take a look at this thing. What is bank? What is this bank thing? Let's check this out.
Holy shit.
Right? Yeah, look at that. But again, off 35% today on the session, 36% almost. It was down significantly more than that at its trough. But the price appreciation, man. So this thing ran from, just earlier this month, it was at 3.6 cents. So from trough to peak, it put in a 9-bagger, man, plus 877% in the course of about a week. I have no idea. Let's find out.
I'm gonna put it down for tomorrow, just out of curiosity.
Oh yeah, no, for sure. Let's run through some deep dive research on this tomorrow. So over here on Coin Market Cap, let me just disconnect from my VPN real quick.
All right, I'll chat while you do that. All right. So let's see.
There we go.
All right, go ahead.
Okay, so I'm back. I just had to disconnect. My VPN there for a second. So let's find out, what is this bank token, Mike? Bank Lorenzo protocol. It's number 240. Okay, so number 240 looks like FDV $352 million. That's pretty significant. What does this do about? Lorenzo institutional management, yield generation financial products. Okay, financial abstraction layer, on-chain traded funds. All righty, so that seems kind of interesting. Let's see if we can find, let me just take a look at the website for this thing. Here's the website, Lorenzo protocol. Okay, powered by World Liberty Financial. So this is a problem. WLFI, they've got a legit product, that USD1. That's a legit stablecoin product. WLFI, though, that's a governance token. Does a whole bunch of nothing. Okay, so yeah. Let's see here. Lorenzo, institutional grade on-chain asset management. All righty.
Did Trump tweet about this or something?
I know, man. He's getting all the tweets out before the ethics stuff comes through on that Clarity Act. Yeah.
Did Trump launch the Lorenzo token or the bank token?
I know. So let's see here. Earned yield on USD1. Okay, USD1 yield
something percent. No, thanks.
I know. No, thank you. Lorenzo OTF. Okay, let's click launch app. All righty, service unavailable. So I would need my VPN back on for this. But VE Bank, vote escrow bank. Okay, lock, unlock, VE Bank. Okay, so whenever I see vote escrow, it reminds me of that flawed VE33 model.
Yeah.
So let's see here. What is VE Bank? Vote escrow token that represents locked banked tokens. It provides governance rights and protocol benefits. Okay, probably not a whole lot of there. Alrighty, campaign. That's probably in points campaign. All right, bridge, SUSD1. staked BTC, bank token, Enzo BTC, okay, and Launchpad, OTF, and Earn. What is Earn and OTF, on-chain traded funds? All right. So this is definitely worth some deep dive research. The fact that the token has run like this tells me that there might be something going on here. And depending on how this pattern resolves, like if we see this pattern resolve like this, then you might be painting a flag up here. So we shall see, but we need to run the deep dive research on it. For right now, looks like it's put in an interesting move. Let's take a look on the weekly. What does this look like on the weekly? I mean, it doesn't look horrible. The fact that it hasn't retraced the entirety of the move, that's a positive thing. If we zoom in to a daily, sometimes, Myke, it's difficult to see any real pattern. But
well, let's save this for tomorrow when we do the deep dive. Let's get into some news, if you don't mind.
Yeah, of course. Let's do it.
Yeah, I mean, I figured that'd be a better time to talk about the prices after we do the deep dive. All right. So looks like Scotty was talking about FOMO on Robinhood keeps growing in revenue. I might have to take a look at that protocol later. So, I mean, this is more bullish news for it. Arcus rolls out 24/7 tokenized U.S. stocks and perpetual markets on Robinhood chain. So it looks like the decentralized exchange also introduced beta perpetual markets and we did a deep dive on this, USDG collateral across equities, commodities, indices, and crypto assets. They officially launched trading with zero fees on more than 95 stock tokens on Robinhood chain and introduced beta perpetual markets through its self-custodied, like that, decentralized exchange. The launch gives eligible traders exposure to leading companies across AI, semiconductor, space, and quantum computing sectors, including mega cap equities such as NVIDIA, Apple, Microsoft, Tesla, Meta, Alphabet, and Amazon. The project said in a statement shared with Block on Tuesday. It introduced, the wait list exceeded 75,000 signups. The platform,
Wow.
yeah, no, it's so it looks like the platform offers perpetual markets across U.S. equities, exchange traded funds or ETFs, commodities, and cryptocurrencies, including the SPY, the QQQ, the GLD, USO, Bitcoin, Ether, Solana, and XRP. It was, who cares who founded it?
No, I care. Who's this guy, Eddie Zhang? That's super important.
It says it was founded by Eddie Zhang and developed by the team behind DYDX.
Okay, that's a big positive. Didn't DYDX just get purchased by Robinhood?
I believe so. So Robinhood Crypto is a strategic investor in the project, available on desktop with an invite-only mobile app in test flight. The platform combines stock tokens and perpetual markets through a single self-custodied, cross-margined account, and said it leverages Robinhood Chain's infrastructure to provide continuous market access. It looks like it incorporates infrastructure from Paxos Labs and Privy. Paxos Labs enables access to USDG. If you're interested in a deep dive on that, in our deep dive library, the dollar-backed stablecoin issued by Paxos Trust Company.
Myke, I'm going to be right back. I'm going to grab some more coffee.
All righty. Global Dollar Network. Privy provides embedded wallet creation and onboarding through email. That's big. Being able to onboard simply by using an email is a very big deal, and create a wallet. Google and other supported login methods per the statement. So, I mean, this is bullish. This Robinhood chain is getting a lot of interest. It's getting a lot of, and there's no token for it. So, it's not something that, you can, really invest in. And if it did have a token, then you got to start looking at if it has value capture and all those things. But this is something that you could have, if it had a token, you could have bought the rumor, sold the news kind of deal, because it's getting a lot of mind share. Again, you can make money if a token doesn't have value capture. There's nothing that's short term. is, how you're going to make money off of volatility, how you're going to make money off of, volume and, things like that is, that's kind of, I have a long-term mindset. And that's why I focus more on value capture is I'm hoping, and it's no guarantee, I'm hoping that these tokens that I'm investing in that have value capture are over time, and that's what we're kind of seeing in this bear market, that they outperform the overall market, that they don't move, with the speculative market, which is the majority of crypto. It's most of crypto moves with Bitcoin. If Bitcoin dumps, it dumps. If Bitcoin pumps, it pumps. With a lot of these value capture tokens, they move independently. They're not correlated with the rest of the market for the most part. So,
sweet, man. Cool, Feifei.
Let's see what else we got. Oh, we just covered Jito deep dive yesterday. Let's see what's up with that.
So yeah, the thing that we learned about Jito is, a very poor value capture model. And not just that, look, I think it's one of the largest, if not the largest LSTs on Solana. So an LST is a liquid staking token.
Mm-hmm.
And, look, you've got to be able to earn more yield when you stake SOL than the native inflation rate of Solana, of the Solana coin.
Well, and you dug into it yesterday and looked for some opportunities, to be able to do some arbitrage, and there just wasn't any.
They don't exist. So if you're earning, what is it, 5.5% to stake SOL using Jito, and then you get that Jito SOL LST, so you've got that native intrinsic staking yield of, let's call it 5.5%. If you can't borrow SOL for less than what, you're paying whatever that APR is to borrow that SOL, if you can't borrow for less than what you're earning natively on the LST, then you can't loop it. So if you can't loop it, then there really aren't many opportunities for you to earn greater yield in DeFi using that LST. And in the first place, if the LST yield is lower than the native inflation rate for the coin for Solana, then you're basically staking it to get closer to just breaking even on the inflation rate of Solana. So that doesn't work.
No. But it says that Jito rolled out JTX, self-custodial trading platform for Solana, Solana tokens and RWAs. So let's see what they got here. So the platform debuted with spot trading supporting Solana assets, including Coinbase wrapped Bitcoin, Sol, Hype, and meme coins, alongside tokenized real-world assets such as equities and exchange-traded funds. JTX also includes professional trading features designed for on-chain markets, Jito said in a statement shared with the block on Tuesday. According to the statement, JTX is designed to close the gap between self-custody and execution quality by offering professional-grade order tools, including resting limit orders, automated execution, and conditional orders. It combines self-custody with extraction tools that have typically only been available through more advanced trading platforms. Jito Labs CEO Lucas Bruder said users hold their own keys, settlement happens on-chain, and there are no custody trade-offs. So JTX charges a fee on each trade, with 80% of the trading fee revenue allocated to the Jito DAO to buy back and burn the JTO tokens, per the statement. The remaining 20% is distributed to referrers based on trading activity generated by them or their referrals. So this is one of those affiliate programs that we don't participate in here, because again, we want to be able to tell you the good and the bad about Jito and the token and all of that. And if we're accepting money from them,
wouldn't be able to do that.
Yeah. I mean, it's I'm sure they would get very upset if we were pointing out that we didn't feel like that their token had value capture and things like that. They'd probably pull our affiliate link.
It's just a conflict of interest, and it would mean that we wouldn't be able to be open and honest about a project, and we're not going to do that ever. But
Exactly.
when I read about this Jito trading, it's like, okay, great. So awesome. But why would I use Jitto to trade Solana tokens and RWAs on Solana when, I could just trade on Jupiter, let's say, or I could trade on, there's a bunch of other perp dexes on Solana. So why would I want to trade on Jitto? Don't need to do that, But it's great to see that they rolled that out. I mean, especially after the deep dive research that we ran yesterday on Jitto. The token, the governance token needs value capture. And it looks like this is a way for it to drive value capture, but I just don't know that it's sufficient. So I'm going to have to pass on trading on Jitto.
Yeah. So Morpho, great project. Love the platform. Token, not very bullish on. I have a bag of it, but honestly, I'm hoping that for those speculative pumps that we see, just because I see that it's going to get a lot of mind share. When the markets take off, the way that it's used with Coinbase and a lot of these institutions, I really think that it's going to get a lot of mind share. But I'm going to be dumping it. The majority of my bag, if not all of it. If we see any major upside, if I see a 10x or something like that, I'll probably just sell the whole bag. But Morpho launches fixed rate lending protocol Midnight on Base to expand on chain credit markets. So CEO Paul Frambot said Midnight builds fixed rate lending at the protocol level rather than on top of variable rate markets, as existing fixed rate protocols do. Morpho has publicly launched Midnight. The launch is aimed at expanding on-chain credit markets by bringing fixed-rate lending on-chain. Traditional credit markets rely on fixed-rate interest rates and defined loan terms, while most decentralized lending protocols today use variable rates. Morpho co-founder and CEO Paul Frambot said Midnight is designed to close that gap by allowing participants to structure loans with defined rates, maturities, and counterparties in a way that aligns more closely with institutional credit markets. Fixed rate lending is fundamental to how global credit markets operate. Without it, on chain markets remain incomplete. Morpho said Midnight allows lenders to borrow or negotiate their own loan terms rather than relying on protocol set pricing formulas. It is available to both institutional and retail users, and it is designed to support a broader range of on chain credit activity, including financing backed by tokenized real world assets, structured credit products, and repo style transactions. When asked how Midnight differs from other fixed rate, fixed term lending protocols, such as Pendle Finance, Term Finance, and Notional Finance, Frambot said many previous approaches built fixed rate products on top of variable rate lending systems. In past attempts, fixed rates were built on top of variable rates, which was imperfect. The right approach is to build fixed rates at the primitive level and layer variable rate products on top, he added.
Okay, so I've got something to add there.
Okay, go ahead.
So that's not what Pendle is. And that's also not what term finance is. Term finance is an illiquid fixed rate lending market that uses an auction system to generate those fixed rates. Pendle is a yield stripping protocol that essentially allows you to create zero coupon crypto bonds. So the way that he described that, I don't think is quite accurate. But I'm looking over here at Morpho Midnight right now, Mike. I've got it pulled up, and this is. Let's take a look at this, right? So fixed rate borrowing, man, that's a big deal. Think about it this way: imagine you've got a PT, right? You've got a Pendle PT token. That's essentially a. Yeah, let me see if I can zoom in there. So you see over here the best rate. That's pretty cool. That's pretty cool right there. Borrowing at fixed rates at like 4%.
Much better than freaking borrowing from a bank.
And look at what you've got going on though. You can supply Coinbase wrap Bitcoin, and you can borrow stables and only on the base chain. So if you're supplying a volatile asset like Bitcoin and borrowing stables against it, that is leverage. Okay. So
Yes.
if you supply $100,000 of Bitcoin and you borrow 50,000 USDC against it, that is 2x leverage. You're running a 2x levered long when you do that. So what happens if the price of Bitcoin declines by 45 or 47%? You get liquidated. So you've just got to understand that even though this is a money market that allows you to access liquidity by borrowing against your Coinbase wrapped Bitcoin, when you do that, that is a form of leverage, not
Would
very much different than trading, Bitcoin perps using leverage.
if somebody thought that we were at the bottom, like the bottom of the bear market, like say October comes and Bitcoin's sitting at like 40 something or 50,000, $1,000, and we think that that's the bottom, would it be a potentially a smart move to, take out a loan against your Bitcoin and, and use that to maybe buy more Bitcoin
I
and
certainly think so.
do a levered loop like that?
I agree with that. Yes. In
That
fact,
might
that's what
that
I'm going to
might
be
be
doing.
I think that might be what I do is, if we get down there, because now explain to the audience, what happens. Like say I take out a loan on my Bitcoin, like a $10,000 loan, or I had $10,000 worth of Bitcoin, and I take a $5,000 loan out, and Bitcoin is at $50,000, and it starts to go up to like 60, 70, 80, 90, $100,000. What happens to that loan?
Okay, so the size of the loan will increase based on whatever the APR is that you're paying on that USDC that you borrowed.
Okay.
And your leverage ratio will decrease on the way up. So and I've got a chart of BTC pulled up here. Let me just share this with a little bit of an explanation so that we can just take a look at this together. So let's say that you are interested in maybe borrowing against your Bitcoin if Bitcoin gets down here to, I don't know, let's call it 50K by
Yeah.
October. If
Nice
this
round
is the
number.
yeah, just keep it simple, right? Let's say the Bitcoin gets down to 50K in October and you've got one BTC. And so BTC is down here at 50K, you own one BTC, you collateralize that BTC on Morpho Midnight by depositing it as collateral, and then you borrow at a 50% LTV. So that's borrowing 25,000 USDC against your one BTC. So if that one BTC is at 50K, if Bitcoin's at 50K, and you borrow against it at a 50% LTV, then you're able to borrow 25,000 USDC against it. Okay, great. Now you've got 25,000 USDC. You can go and do something else with that in DeFi. You can go and swap into some other tokens if you want exposure to them, whatever.
You can loop.
So you could loop it if you wanted to. So let's say that you've got that, that you're basically running a 2x levered long at that point. What is your risk? Well, Bitcoin would need to decline by a little bit less than 50% for you to see that levered position go to zero and for you to get liquidated. So that would mean that Bitcoin would need to decline by around 46%, because you've got to keep in mind, you don't get liquidated if you're at a 50% LTV. You don't get liquidated at a 50% drawdown. You get liquidated at a smaller than 50% drawdown.
Yeah, because
so
they want to make sure that they get the money, the money back.
Well, so it's about LLTV. So your liquidation LTV is a little bit smaller than whatever that max drawdown is.
Well,
so
yeah,
basically,
but that's because they need to make sure that whatever they lent you, they get that back plus some.
They need to make sure that the protocol remains over collateralized.
Exactly.
That's the thing. So basically, you would need to see Bitcoin draw down to $25,000 or $26,000 for you to get liquidated on that levered loan. So if you think the bottom is in, if Bitcoin touches 50K, I think it would actually make some sense to take on some leverage at a conservative amount of leverage. So maybe you don't even run 2x leverage. Maybe you do something like 1.3 or 1.5, something like that. So that would make a lot of sense, especially if you can borrow at a fixed rate. So
Crypto Dave sharing some alpha. He's like, it's a nice option if you borrow at the bottom. It's a terrible option if you do it at the top of a bull market, speaking from experience.
Yeah, no shit. Oh, man. So, but also being able to borrow at a fixed rate, like here, let me see if I can zoom in a little bit further. So borrowing at a fixed rate against your Bitcoin, man, that is awesome. Being able to borrow at 3.4% or 3.5% or even 4.8%, that's a pretty attractive rate to be able to borrow at a Bitcoin low,
So
at a bottom.
if you have those three options, like why would anybody be using the 4% one when there's a 3.5% one?
Liquidity. So
Uh,
if we take a look here, the borrowed depth for for this market where it says you can borrow at
uh,
whatever these rates are. So there's no liquidity here to be able to borrow. And then
oh,
over
gotcha.
here, yeah, even this market, there's only 48K of liquidity depth. So you'd be using the most liquid market, which is this one right here, the top one.
Okay, so basically everybody that's providing liquidity is providing it there because they get more.
So yeah, I think the terminology would be that if I'm using a vault, I'm not providing liquidity, I'm collateralizing an asset. So I'm depositing Coinbase wrapped Bitcoin into a vault. I am collateralizing that asset.
Mhm.
I'm not necessarily depositing liquidity, although you kind of are. Yeah, just slightly different terminology. But yeah, I'm looking for liquidity depth. And unfortunately, this market on the bottom here, if there's $800 in borrow depth, then these rates aren't really real because there's no liquidity there.
Gotcha.
Um, so yeah, look, this just launched today, right? Morpho
Yeah.
Midnight. Yeah, this is really cool. I think that we're going to see this gain a lot of traction.
Let's see
Now,
what
what does
else.
that mean for the Morpho token, though? Right?
See,
Does that mean
and that's the thing is it's just I mean really Morpho token. My understanding is like isn't it? I'm trying to remember. We do so many deep dives. Isn't it just a governance token?
I don't recall whether we've done a piece of deep dive
Oh, we
research
did.
on Morpho?
We definitely
Yes.
we
Yes, we
definitely did.
did. Yeah, we did. We ran that piece of research for Morpho, and I could find it. So we ran it on June 10th.
I
In
know it
the
lacked value capture. I know that.
Yeah, so we would need to run back through the deep dive research to really find out. But
Well, we're
again, yeah,
yeah, absolutely. Well, let's go ahead and jump on over it, and we can touch on it after the deep dives. But I want to make sure we get to the deep dives. So let's go ahead and pop on over there, and you choose today. Which one do you want to do first?
sweet. Well, let's take a look. So, just so that everyone knows, if you want to support us, we take no money from any project, any protocol, any coin, any token, any individual. The only way that we can support ourselves and continue to provide all of this phenomenal research is, if you sign up for the weekly Intel overview, it's $10 a month. Or if you sign up for the premium live calls, that's the only way that we can actually support ourselves here. So let's take a look. Let's scroll down. Cubic and Quant. Huh. How about we start off with Quant? Let's take a look at this one. Okay, institutional interoperability and tokenomics analysis for Quant. Okay, so before we run through this, I just want to refresh myself and take a look at Quant. What's the token for this thing? Quant,
QNT.
QNT. Okay, Quant. So here's the token. I'm going to zoom out to a weekly. Let's just see what we see. Okay, let me remove these moving averages here so that we don't have that. All righty. I'm going to throw down some trend line resistance, something like that. And we've got horizontal support, something like that. So yeah, down and to the right. So down only for this thing. All right, so now that we've taken a look at the chart of QNT, let's run through and let's take a look at the deep dive research. Now, real quick though, whenever I see a coin that is down only, that tells you quite a bit about the tokenomics.
Traditional finance is trying to integrate decentralized ledgers, but strict global compliance mandates are actively blocking their path. Commercial banks and central banks need the infrastructure of programmable money, but the baseline mechanics of Web3, specifically tokens that distribute network validation fees as passive yield, force these assets into the legal category of unregistered securities. In the United States, direct profit sharing triggers the Howey test, placing these tokens strictly under the purview of the Securities and Exchange Commission. Meanwhile, the European Union's MiCA regulation applies strict market abuse and licensing prohibitions that capture any validator or node operator handling direct revenue distribution. Institutions require the connectivity of decentralized networks to settle tokenized deposits and manage real-world assets. Yet, due to these strict risk capital requirements, they cannot legally custody the utility tokens required to operate them. Quant Network approaches this compliance barrier by stripping its native asset, QNT, of all programmatic yield, block rewards, and dividend mechanisms. This split visualization contrasts standard infrastructure tokens with QNT. While traditional Layer 1 networks dilute token value through inflationary emission curves to pay validators, QNT operates with a hard cap, permanently locked at 14.61 million tokens. No new tokens can ever be minted. As enterprise clients deploy applications, the circulating supply actually decreases. This architecture relies on an indirect value capture model. Instead of generating new tokens out of thin air to incentivize nodes, the network derives utility strictly from software licensing. Node operators and platform users must interact with existing circulating supply to authorize cross-chain messages. By converting enterprise fiat payments directly into automated smart contract lockups, Quant engineers a reverse velocity token economy. This system transforms traditional corporate onboarding into a continuous self-stabilizing supply sink. Standard blockchain interoperability relies on lock and mint smart contract bridges. These constructs pooling assets into centralized contracts, making them frequent targets for multi-million-dollar exploit vectors. To secure institutional capital, Quant deployed the Overledger Fusion rollup, categorized as a Layer 2.5 optimistic rollup. Overledger's architecture operates as an API gateway with 4 functional layers. It hovers above 74 connected chains, coordinating data flow without executing base layer consensus. Sitting off-chain, Fusion lets institutions consolidate disjointed stablecoins into a single multi-ledger asset, achieving deep liquidity without altering native source codes. Bypassing standard base layer execution neutralizes the security flaws of standard bridges. It also moves the entire economic engine of the protocol strictly into the application layer. This zero-bridge architecture allows Quant to operate as the technology provider for major central bank digital currency trials, including the European Central Bank's digital euro. Similar infrastructure is currently being tested for the settlement of programmable commercial bank money in consortia led by UK Finance and the Deutsche Bundesbank. If the Quant protocol collected gas fees and programmatically distributed them to token holders, European regulators would classify QNT as a financial instrument under the MiFID II framework.
So I think we're getting into this value capture model now a little bit.
It touched on it a little bit earlier, but yeah, let's get the details.
The Swiss Financial Market Supervisory Authority, FINMA, officially recognizes QNT strictly as a utility token. Integrating passive yield would legally compel these central banks and Tier 1 financial institutions to liquidate their positions and sever their technology partnerships to remain compliant. An enterprise pays a fixed fiat fee for overledger access. The Quant Treasury automatically executes a spot buy for the equivalent QNT. These tokens are pulled from exchange liquidity, deposited into a smart contract, and locked for 12 months, permanently removing them from active circulation.
Okay, so if they're locked for 12 months, that's not permanent.
Yeah.
Parallel to licensing lockups, node operators must engage in gateway staking. They lock QNT as a performance bond to access high-volume transaction routing rights. Furthermore, high-volume enterprise users pay variable consumption fees for every API read and write execution. This metered usage generates continuous, non-speculative spot market buying pressure. This mechanism engineers reverse velocity. Under standard tokenomics, high network usage increases token turnover and sell pressure. In the Overledger system, enterprise adoption structurally extracts liquid supply from the open market and sinks it into locked contracts. Despite the impressive efficiency of this automated lockup engine, the system still contains a specific mathematical vulnerability. Analysts define this as the fiat-pegged decoupling risk, a structural side effect of pricing enterprise utility in traditional currency while settling in a volatile crypto asset. This graph plots token price on the vertical axis against the number of QNT tokens locked per license on the horizontal axis. Because the enterprise cost remains a fixed fiat amount, the conversion rate into QNT dynamically adjusts based on market conditions. As the speculative price of QNT escalates, the absolute quantity of tokens required to satisfy that
Notice
fixed
the
fiat fee
verbiage.
shrinks proportionally. This inverse relationship.
Notice the verbiage. It said the speculative price. So it's words have meaning, and it was used for a reason because uh, pretty much every crypto token out there right now, its price is speculative. Even the ones that have value capture, are speculative. Until there is a repricing of this market, and it could be very ugly, for some projects. Until there's a repricing, all of these prices that you see that we're paying for these tokens are pure speculation. But sorry, go ahead.
Oh, it seems also like the actual usage of this protocol by these institutional entities, the adoption, that seems to be highly speculative too. It looks like, aren't they just in trials?
Functions as the decoupling vector. The higher the token valuation goes, the weaker the demand sink becomes in terms of raw token volume. To maintain a consistent rate of supply contraction at higher market prices, the network requires exponentially larger volumes of corporate onboarding. If speculative pricing outpaces actual enterprise adoption, the token value decouples entirely from its underlying utility. This decoupling effect is further complicated by the protocol's integration with permissioned corporate architectures. High-value institutional transactions frequently settle off-chain on private enterprise EVM networks, or R3 Corda. Because the Treasury acts as a buffer pooling these utility fees, massive spikes in real-world corporate usage may be delayed before transmitting into public spot market pressure.
So that was important. The fact that these transactions settle off-chain, that's important. Value doesn't accrue to QNT.
Additionally, Quant operates on a patented closed-source software-as-a-service model. This creates high technical friction against the open-source development standards that dominate standard Web3 engineering. The protocol is actively fighting for capital market dominance against well-funded, open-source decentralized interoperability standards that banking consortia could choose to adopt directly. The Quant network isolates institutional capital from the risks of base layer consensus, engineering a strictly compliant, non-dilutive asset. But for QNT to realize its structural value, the sheer scale of real-world corporate integration must continuously outrun the dampening mathematics of its own fiat-pegged token economy.
Yeah, see, that's a problem. So we've seen so many of these protocols now, and it seems like many of them that have flawed tokenomics like Quant require massive adoption, massive user growth, and those users need to drive a ton of like exponential transaction volume using whatever the product or the coin or the token is. There needs to be utility for that product token or coin, and it needs to accrue value back to the QNT coin itself. It looks to me, just by watching that piece of video content right there for the last couple of minutes, that QNT needs to see massive adoption to even have a shot at it, like accruing any value to the token.
Potentially, at the very beginning, I think when you were getting coffee, it mentioned it. But there is a mechanism in there where one, like a lot of projects, they have to adopters. So I kind of looked it up. It looks like Barclays, HSBC, Lloyd's Bank, Bank of England, and a bunch of others have started using Quant, and they're live, according to what I'm reading here. But they have to lock Quant to be able to run on the network. So that takes tokens out of circulation. There is a fixed supply, so that would potentially make it deflationary. As adoption was if adoption continued to grow. And then it looked like that there was some mechanism that actually, as it's being used, it goes, they lock it into smart contracts, but it looked like it was only for 12 months. So I don't know if I would actually consider that as being deflationary. that mechanism being deflationary. If at some point those are coming back into the market.
So you know what I ask myself? Why would institutions even have any interest at all in using this? Like, why use this?
According to the video, it was because stable coins. Like instead of instead of stable coins being kind of fractionalized across multiple chains, what Quant does is it creates a stable coin that I don't know if it represents all of those, but makes it to where it doesn't need to be bridged. It doesn't need to any of that, so it can operate on their network using liquidity from like 17 different chains.
Yeah, again, why would they even want anything to do with that? Because it looks like they're going to launch OUSD instead. So like
valid. I'm just explaining what it is.
Yeah. I'm just saying, like, hey, I don't think any institutions are going to use this thing. That's what I think. I think
I would disagree, just because they are. So the institutions using Quant's Overledger as an interoperability layer for tokenized deposits and programmable money initiatives: Barclays, HSBC, Lloyds Bank Group, NatWest, operating within the Great British Tokenized Deposit Project, and the UK Regulated Liability Network pilot. So the LAC chain banking partners, the Inter-American Development Bank, so across Latin America and the Caribbean, are using Overledger. It looks like Bank of England and the Bank of International Settlements, the BIS, Quant engineered the API technology vendor stack for Project Rosalind, testing retail and programmable CBDC use cases. So, there is adoption. You do your own research on how deep those, that adoption goes. But what I'm reading is those are all live on the Quant network. But
so I've got some more information. I've got some more information about that, Mike. So it looks like that Project Rosalind, that was a pilot study that has been completed.
That's what I said.
Right. So that's a pilot study. So this is not something that's actually being used right now.
Well, that's just that one. Like I said,
here's the others. So UK finance and UK banks, they are in advanced testing. Okay. So, all right. And then you got Latin America and the Caribbean. That's a live production pilot. And then you got this SIA, which is a European payment infrastructure operator. They're working on infrastructure integration, it looks like. And then you got AWS for marketplace availability. So the way that I think about this,
AWS is more of an infrastructure. Like, they're the ones, the cloud partner that's hosting, the Overledger deployment. So I don't know if I would consider that adoption.
Yeah. So I agree with you there. So transaction volumes on Overledger, and it's I asked it, like, what are the volumes there? And it looks like Overledger does not publish real-time public throughput metrics. So what the fuck? Like, why would they not publish that?
To be fair, either does Quant, or not Quant, either does Canton. A lot of these privacy networks. They're not very transparent with their data. So.
Yeah,
I'm just playing devil's advocate.
So the problem for me is that whenever I see, like, partnered with institution, XYZ,
Absolutely.
or like in pilot or testing, whenever I see stuff like this, it's always been a bit of a buzzword. These buzzwords, like this hype doesn't necessarily translate into real usage or value.
Not always. I think that we need to, it's more nuanced than that. I think that we need to, look at the stages. So like an MOU. An MOU is a memorandum of understanding. That's basically two people saying, hey, I think of it as dating. You went on a first date. Hey, I like you. I want to get to know you better. That's what an MOU is. There's you're not married. There's no legal contract. There's nothing holding either party to anything. It's just, hey, we're interested in looking into you. That's all an MOU is. Now, doing live testing, that's, hey, we've been on a couple of dates. Maybe we consummated this thing. We're a little more serious now. And then, of course, if they go live, a full production launch, okay, maybe now we're engaged. Maybe we got married, or we had some kids or something like that. So I think that it's, we need to start looking at these projects as far as the the depth of the relationship, because I think that some of them, I mean, if you have all of these, there's obviously an interest. If all of these are actively testing, I would say it's a strike against quant because it's been out for so long. Why aren't they further along in their testing? That's a valid question to ask. Is it bullish that so many are testing it? Absolutely. But why so late in the game? Could a bunch of these go to full production? Possible. But again, quant, what is quant sitting at right now as far as market cap? QNT.
Well, I mean, I'm looking at the chart.
64. So it's number 64 right now with a market cap of, where are we at? Why am I not finding it?
Market cap is, the FDV is almost $1 billion, just a little bit less than $1 billion is the fully diluted valuation for the QNT token. It's number 64 in the top 100.
Mm-hmm.
But when I look at the chart, though, like
right
there's nothing to get excited about when it comes to this chart. We see a series of lower highs, and QNT right now trading at $64. That's where it was back in the last bear market. So it's basically done nothing but move sideways since 2022. So anyone who bought it before 2022, if you bought it up here, you're underwater. If you bought it after 2022, you're either at break even or underwater. So the token price itself is telling me that whatever adoption there might be, maybe, hasn't meant anything for the QNT token. And I'm dubious of the fact that this would even be adopted at all, because there are so many other projects going after this same market. Like, why in the world would, if I'm an institution, why would I want to use some complex protocol like Quant to program bank accounts or stablecoins, or it says here, harness programmability of bank accounts and stablecoins to transform money, automate complex workflows, and secure a competitive edge in today's markets. Like, why would I want to use this at all if I could just use, a native stablecoin like OUSD? Why would I want to use Quant?
Yeah.
So I'm a little bit dubious of this, especially when it says trusted by central banks. Like, ugh. Great.
That goes into the Bank of International Settlements and basically testing it out for CBDCs.
Yeah, and it's like, so why would you be bullish on CBDCs? You know what I mean? Like, ugh, yuck. Like a digital pound, a digital euro. Like, the regulations in the Eurozone are like, authoritarian communist type regulations. So like, I don't see why I would be bullish on central bank digital currencies. In fact, if we're being completely, open about this, I think that USDT and USDC are being regulated into becoming CBDCs. So I'm not exactly bullish on CBDCs, man. I'm just not.
You're not?
No.
I'm investing. I'm investing heavily in CBDCs. I'm kidding.
Yeah. So, okay, if I had to assign a grade to Quant, I would give it a D, simply because QNT, the token, it looks like doo-doo. I'm not, yeah.
I'd give it a C- or a C, just because I do see where there's potential adoption going on, and I do see where with adoption that it would potentially be deflationary, because of the fact that the adopters would need to lock up quant. There is a fixed supply, So there is the potential with mass adoption for it being deflationary.
Yeah, I don't know. I'd rather not bet on adoption
No,
for
I'm not saying I'm going to
CBDCs.
buy it, but we're giving
Yeah.
giving it a grade, and it's
How
actually
about
a
how about a
lot.
C minus minus? You get two minuses there.
Well, just all I'm saying is that there's other projects that we've graded that have like just shit tokenomics. They have no chance in hell, when it comes to value capture, and we've given them D's. So in my opinion, from what I saw on Quant, it's better. It's not good, but it's better than those that we gave D's to.
Sure. Yeah, I could see that. C, grade of C.
Yeah.
So let's take a look at Cubic. So here's Cubic. Again, it's a similar type of pattern, down and to the right, down only. And if we just draw in a little bit of trend line resistance from the all-time highs, it's putting in a technical breakout here. So I'm going to go ahead and change up this trend line. I'm going to draw it like so. And importantly here, Cubic is trading below its its all-time lows from when these data launched, and this is coming from Gate.io. It looks like the launch was on Gate.io anyway, was back in May of 2024, and this thing is trading very, very close to its all-time lows. So just because something is cheap does not make it a good opportunity.
Looks like a great buying opportunity for me, David.
No, don't do it, Myke. All right, let's go ahead and play this.
Most Layer 1 protocols face a structural trap. As network utility scales, users are forced to pay increasingly volatile, expensive gas fees to validators to get their transactions processed. The Cubic network abandons this standard model. Instead of a speculative fee market, the protocol treats its native token strictly as physical, bare-metal computational energy. Because of this architecture, standard wallet-to-wallet transactions on Cubic do not require network gas fees. User friction is entirely decoupled from network congestion. This creates a macroeconomic puzzle. Cubic maintains a strict maximum supply cap of 200 trillion tokens, yet the protocol generates a relentless...
Okay, 200 trillion tokens. Like, that's significantly more than most other protocols that we see.
Well, that explains the price of it.
I mean, it's trading for a fraction of a penny, but why couldn't this trade for zero?
emission rate of exactly 1 tokens every week.
Whoa, emission rate of 1 trillion tokens a week?
Holy shit.
On a 200 trillion hard cap?
To maintain economic equilibrium and prevent the supply from colliding with the hard cap, Cubic relies on a programmable multi-vector deflationary architecture that continuously destroys circulating supply. This deflationary engine operates across 4 distinct vectors: the supply watcher algorithmic burn, bare metal execution fees, smart contract IPOs, and a Dogecoin merge mining buyback loop. Cubic functions as a programmable thermodynamic system where creating economic value demands continuous resource consumption. The baseline macroeconomic rule of the Cubic protocol is absolute. Exactly 1 trillion raw tokens are generated every 7-day period, termed an epoch. These weekly emissions are nominally generated to compensate the 676 validating nodes, known as computers, who run the consensus engine and execute calculations. If left unchecked, distributing 1 trillion tokens a week would quickly overwhelm the network's 200 trillion absolute supply ceiling. Rather than dynamically restricting the raw block reward like Bitcoin, Cubic maintains that constant 1 trillion token emission, but structurally increases the percentage of those tokens permanently burned before they ever reach the market. The effective net weekly emission equals raw emission multiplied by 1 minus the burn rate. At Epoch 227, the burn ceiling scales to 77.5%. On the macroeconomic table, the net new weekly supply drops 50% to 450 billion tokens. The protocol enforces this via the Supply Watcher smart contract. It acts as a dynamic thermostat, capable of lowering the actual burn rate below the 77.5% ceiling if transaction velocity drops, ensuring validator compensation remains viable. This macro ceiling enforces token scarcity from the top down, shifting the burden of internal value creation directly onto micro-level smart contract execution. At the micro level, smart contracts on Cubic bypass traditional virtual machines entirely, running directly on the hardware via the UEFI layer. Because these contracts consume direct hardware resources, each one must maintain a prepaid execution fee reserve, a mandatory balance of computational energy. If a contract depletes this reserve, it enters a dormant state. All state-changing procedures are suspended, but the contract's read-only functions remain fully active and free, protecting users from dead ends. To calculate the cost of execution dynamically, computers log the exact time required to run contract procedures, measured in raw CPU ticks. This flowchart maps the consensus phase to agree on the final execution fee, moving from measurement to deduction. A 66.6% percentile threshold filters out outlier tick reports, ensuring colluding validators cannot artificially inflate execution costs. These execution fees strictly apply to user procedure calls and contract-to-contract functions. System callbacks and read-only functions are exempt. Crucially, every single token deducted through this system is permanently burned. None of the execution fees are distributed back to the validating computers. As the ecosystem scales, the demand for bare metal runtime forces a continuous, non-reversible destruction of the circulating supply. On standard DeFi platforms, contract deployers extract all service fees generated by their applications. Quibic rejects this model, enforcing the democratization of contract ownership across the community. Before any smart contract is approved for public deployment, the protocol requires it to be divided into exactly 676 unique, tradable shares. These shares are distributed to the public through an on-chain Dutch auction mechanism during a designated weekly epoch. Investors submit desired share quantities and maximum prices. The protocol sorts bids from highest to lowest. The bid satisfying the final available share sets a uniform clearing price, here 7 cubic. Bidders offering more pay only this price, with surplus capital refunded. This creates a third major deflationary vector. 100% of the cubic capital raised at this final clearing price is permanently destroyed. Investors eagerly bid in these auctions because holding those shares yields passive income, distributing 100% of the contract's ongoing operational service fees directly back to the shareholders. By tokenizing ownership, the
Confusing
IPO
as shit.
transforms early network speculation into permanent programmatic deflation, aligning the incentives of developers, investors, and the broader protocol. Historically, Cubic's internal operations faced a severe hardware bottleneck. The network split its general-purpose CPU compute power equally between mining Monero and training its native artificial intelligence initiative, Agarth, severely throttling AI capacity. The 2026 protocol upgrade decoupled these specific hardware workloads to resolve the conflict and drastically optimize network efficiency. Under the new parallel architecture, script-compatible ASICs execute Dogecoin merge mining independently, completely isolated from the network's AI workloads. Decoupling the mining processes successfully freed 100% of the network's CPU and GPU resources to focus purely on training Agarth's artificial neural networks. When an ASIC miner submits a valid share, it bypasses centralized pool operators entirely. Instead, the share is verified and finalized through decentralized Oracle machines run by independent computers. This setup creates an aggressive economic flywheel, starting with ASIC miners successfully producing Dogecoin block rewards directly on the Cubic network. Those mined Dogecoin rewards are immediately sold on the open market for stablecoins, which are then used to execute automated buybacks of native Cubic tokens. The purchased tokens are paid out to the miners as enhanced rewards, while any remaining surplus capital from the buybacks is routed to a null address and burned. This integration repurposes external proof of work as an aggressive financial engine that imports foreign liquidity specifically to compress Cubic's token supply. The Cubic network sustains an intense economic pressure test, mathematically enforcing a 200 trillion absolute supply ceiling against a relentless influx of 1 trillion newly minted tokens every single week.
So that's the important part. If there's 1 trillion tokens minted every single week, and we see the token price is going down only, then what that tells me is even if there might be a deflationary engine at work here, obviously it's not working. The whatever that buy pressure is, whatever that deflationary pressure is, obviously it's not working.
that the tokenomics, when it was explaining the tokenomics, that was complex as shit, and I do not fucking understand it.
Well, so here's what you need to know: is number going up for the token? Because
No.
if it's not, and it is not, then
Well,
even
but same can be said for Kent. I mean, I'm very bullish on Kent. I mean, not to say that this is, comparing it, apples to apples with Canton, but Canton is still inflationary as well. So, I want to make sure that we have that caveat that this could, become deflationary at some point. But I don't understand the way it explained the tokenomics. I just don't understand the tokenomics.
So what it did is it explained the deflationary sinks for the cubic token, but it also told us, hey, there's a token mint each week of 1 trillion. So even though there seems to be a deflationary engine, it looks like that engine is broken, or at least it's
not broken. It just hasn't, whatever the mechanisms are, haven't gotten to a point to where it's operating efficiently enough to be deflationary, is my understanding. And, and there is a max cap, not to say this is a good thing, but a max cap of 200 trillion. And it sounded like that the more it pushed towards that, the more that the burn engine worked to suppress the supply. It was so complex that it was almost like a bunch of buzzwords and stuff like that. And I just really wasn't able to grasp how the burn mechanism works.
Well, obviously it's not working because number go down only for the token.
Yeah, currently absolutely not.
Token flow diagram displays how equilibrium is achieved.
See, equilibrium. There we go. Is it at equilibrium?
No.
Obviously not.
The emission faucet is offset by the simultaneous compounding action of 4 distinct deflationary burn sinks: the supply watcher, execution fees, IPO burns, and Doge buybacks. Because of these compounding forces, long-term macroeconomic projections modeled in this graph show the total circulating supply peaking at roughly 196.8 trillion tokens before compounding downward beneath the hard cap. This architecture avoids the...
That's
when you buy. That's when I would buy.
But again, this is a model. Like, this is not real. This is not what's happening now. This is just modeled out. And look at the time. So T plus 6 years. Like, how long has this token been out for? Quant USD,
not quant, cubic.
Oh, right, cubic. Thank you, cubic USD. So I'm just taking a look at this thing. Looks like it's been around since February of 2024.
Yeah.
So that means
January of 2024.
Yeah, Feb 2024. So that means that by 2030, it will have reached its hard cap.
If it follows the model.
Yeah, this is just the model, right? So right now it looks like this thing is highly inflationary.
Structural reliance on volatile, user-punishing fee markets typically required for protocol survival. User interaction remains completely frictionless, while the rigorous demands of programmable computation pay the structural cost of network security. This underlying architecture alters the institutional valuation of the asset, moving it from inflationary risk to deterministic scarcity. Cubic functions as a rigorous, self-regulating economy defined by structural destruction and verified computational work.
Yeah, I don't know, man, because when I'm taking a look over here at the actual project website, so this is Cubic. The website here is cubic.org. So here's the homepage. They're advertising decentralized intelligence. Okay, they refer to themselves as a high-performance layer 1 protocol, enabling instant finality, feeless transactions, and the fastest smart contracts built on useful proof of work. Cubic is the first to integrate artificial neural networks for the future of artificial general intelligence. Man, what a bunch of bullshit. So let's just take a look at the ecosystem. Projects on Cubic. Okay, so Cubic Swap DEX. Let's take a look at the DEX. All right, here's Cubic Swap DEX. It says here that Cubic Swap DEX is a decentralized exchange for the Cubic ecosystem, offering token discovery, live order book routing, swaps, and liquidity tools for cubic assets. Let's take a look at the cubic DEX. Okay, what type of liquidity do we have here? So I'm going to go ahead and filter by market cap. So let's see here. What is this stuff? We've got VSTB001. Don't know what that is. You got QMine. So it looks like if we bring it back on over to the ecosystem, I saw QMine in here. QMine. There it is. QMine. So QMine is tokenizing physical mining assets on the Cubic blockchain. Okay, that's kind of interesting. Let's bring it back to the DEX. So here's that Cubic DEX one more time. I'm going to zoom in so we can all see this. And it looks like the largest asset by US dollars, in US dollar terms, on this Cubic swap DEX is VSTB001 with a market cap of $11.5 million. And then you've got QMine at 1.7 million. You've got Byte, and I don't know what Byte is. We'll take a look at that at 1.2 million. Take a look at Byte, plus 73% in the last week. What is Byte? Okay, so you got an order book on the left. You've got a bunch of random coins on the right here. You've got market trades. You can place limit orders. Okay, so this looks almost like a perps. This looks like, no, this is spot. This is for trading spot. So let's take a look here. Let's click on earn. Staking pools, yield, Garth, 256%. Wow, okay, let's take a look at this. So Garth and Cubic. Garth Cubic, 7-day fee. Okay, fees earned by the pool owner over the last 7 days. Let's sort by 7-day fees. Okay, so it looks like none of these pools are actually generating much in fees at all. And that makes sense because if you look at the 7-day volume here, if I sort by 7-day volume, there's no volume here. Yeah. You got $1,500 in 7-day volume. Okay, so there's no volume flowing through any of these liquidity pools. So that means you can't make money as an LP here. That's not going to work.
You can lose money.
Yeah, you can lose money, that's for sure. There's no liquidity, so the moment you deposit your liquidity, you're stuck. Orders, okay, so this looks like it would be for trading spot. That's what this looks like. Tokens, you got a bunch of random tokens. I mean, man, like this looks like a nothing burger. That's what this DEX looks like. There's no liquidity for any of these coins, nothing to speak of anyway. And when you go to the pools, there's no volume. There's no trading volume here. So how exactly?
Let's check out some of the other aspects of the ecosystem.
Sure. So QMine. Let's take a look at QMine. So I'm going to hop on over to qmine.io. It says, own the hardware, earn the revenue. Tokenized mining rigs, real hash rate, on-chain payouts. Okay, the first real world, yeah, this could be interesting. The first real world asset token turning physical infrastructure into passive yield. All right, so whenever I see passive yield, I'm immediately suspicious. Like, you've got to describe to me, how is that yield being generated?
Yes.
Okay, so let's see if we can figure it out. Official QMine market powered by QX smart contract protocol. All righty, QMine trading, real-time stats. Okay, so micro cap, 1.7 million US dollar market cap. Very few token holders at 920. One active worker, no hash rate. Okay. And it looks like the Bitcoin hash rate, all right. Doge hash rate doesn't even show anything. Epoch 222. Okay, how does it work? 3 steps from setup to passive income. Okay, that's a bad word. Whenever you see, that's a bad phrase. Whenever you see passive income, you've really got to figure out, like, where is the yield generated? How is this generated? If you can't figure out where the yield is generated, you are the yield. Yep. Tokenization, physical mining infrastructure, revenue, high performance fleet mined 24/7. What high performance fleet? You got one active worker, bro. Like what
Yeah.
high performance? What is this high performance fleet you speak of? Like what are you talking about?
I mean,
And then
I guess if it's capable of high performance, it's not operating at currently at high performance.
yeah, I mean, okay. So your assets in real time on the blockchain, okay, powered by the efficiency of something or other. Join the community. All right. So dashboard, XMR mining, BTC mining, Doge mining. Let's take a look at Monero mining. Okay, 384 active workers. Looks like 25 total payments.
So it looks like I think it was Scotty. Yeah, he said, does it mine Monero or Dogecoin? It said Doge in the beginning, so it looks like it does both and Bitcoin. So it looks like me and you were wrong, Scotty.
Yeah, so I mean, it looks like it does XMR mining and Doge mining. Very few active workers for the Doge mining, and the Doge balance 5,800 Doge. That's like
what, 58 cents or something like that? Or
that's like a couple $100. Like,
yeah.
Okay, Bitcoin mining, Bitcoin balance, fucking nothing. XMR mining, okay, all right. Well, I mean, so how do you make money with this? Like, how do you actually use this?
I mean,
Tokenomics.
I would guess that people have to buy the token, and then with the token, they're buying miners, and they just haven't bought any miners yet because nobody's buying the token. I don't know.
I mean, yeah, this is, dude. Like, if you can't figure out how to use this thing, like within the first couple of seconds landing on the website, then there's something wrong. Like,
check out the XMR payments. Like, what do we got going on there?
XMR payments. So, okay, that's today, just a couple of minutes ago. 1/10 of one XMR, that's $20. So it looks like so far today, the payments have been about $60. So, like,
Yeah,
$60, really?
I like this idea. I would love to, because I don't have the technical know-how to set up a miner or anything like that. And I definitely, even if I could figure it out, it probably wouldn't be profitable because I just don't understand the nuances. The profit margins on a lot of these are so small. But I would love to, be able to invest in mining, just because, I would love to, be able to, earn yield. If I could buy a token and, earn, 5, 10, 15% or something like that, that would be awesome. But yeah, I don't see the opportunity here yet.
Me neither. And so epochs. I'm assuming here that an epoch is 1 week. That's my assumption, simply because that wasn't that what the epoch time frame was for quant? I think it was 1 week, and every week it's like 1 trillion quant tokens get.
No, you're getting the two Qs mixed up. It's this one. It's the cubic. Cubic is the 2 trillion.
Oh, cubic, yeah.
Quant has a cap supply, and it's only like 20 million or 21 million or something like that.
So when I'm looking here at holders growth over time, and if my assumption is correct and each epoch is 1 week, then we're going back over the last like 2 years. And so holders, if each epoch is 1 week, then holders have basically moved sideways for 2 years.
Yeah.
So that's
I see this as being too buried. I mean, this could be a super early freaking gem, but I don't see it. Super high risk. I mean, a cubic is kind of a very not super talked about or well known project. Let alone this project that's buried in that not very doesn't have a whole lot of mind share. So you have a low mind share project buried in a low mind share project. So
look at the chart. Look at the chart, Myke.
Yeah, I don't personally see. I like the idea. I just don't see the opportunity personally.
I don't see any opportunity here at all. I mean, I think that all you need to know is what you see when you look at the chart. This is what a dead project looks like.
Well, and we still got 15 minutes. Let's look at some of the rest of the ecosystem, because I mean, it looks like that they had some good ideas. It's just the execution just isn't there.
Yeah, well, execution is the vast majority of it, right?
Yeah.
So let's take a look at cubic metrics. Okay, equips the cubic community with data, enabling developers, analysts, and enthusiasts to gain deeper insights and track ecosystem activity. Okay, that's great. Where's the website? Where's the website, man? It says origin incubation. So there's no way to track the metrics on this. All
Well,
right.
they're building it out right now. They're in the incubation period. Let's look at the OTC escrow.
Okay, OTC escrow incubation. So we can't even look at it.
Oh, it looks
there we
like
go. Website.
Oh,
There's
there
a
you go.
website. Yeah.
Nice.
OTC trading, public deals, no public deals. Oh, it just brought me back. It looks like to. What is this? The DEX or something?
Yeah.
OTC trading with escrow SC, like deals, no deals. Like, okay. So nothing there. And Solana Bridge in testnet in incubation, Cubic Connect incubation, Hash Wallet, more than just a cold wallet. It's a complete security system for your crypto. Yeah, I'm not going to use that. Random lottery, simple and fun way for the Cubic community to engage, play, and win. They've got a merch shop, Q Bond, liquid version of Q Earn. Okay, what is this? Liquid version of Q Earn that allows users to lock funds and earn staking income. Let's visit the website. Hopefully there's a there. Earn yield and stay liquid, trade anytime. Okay, get started. It wants me to connect. I'm not connecting. Advanced DeFi features. Dude, is this a scam? Is this thing a scam? I'm starting to think this is a scam project, man, because there's nothing, like, you can't see any metrics for it. You can't use any of this stuff. There's no liquidity. And it's like, you look at the token and the token goes down only.
I see a lot of people on X talking about it.
Me too.
That's kind of why I picked it, because with the mind share that it gets, I was like, well, let's see if there's anything there. And I'm not seeing it.
It looks like a scam. Like, I don't see anything here. I don't see how you can use any of this stuff to do anything. Okay, let's keep looking.
And it's not like it's a new project. It's been around a minute.
It's been around for like 24 months, like a couple of years since the start of the beginning of the last bull in the beginning of 24.
So why is nothing built out?
Okay, let's take a look at whale alert. It wants me to go to X. Okay, information distribution tool. Okay, let's get some real-time updates on this. There's nothing here. I can't even click on this. It's a Discord bot. Ugh, yuck. I don't want to go on Discord. Okay, let's see here.
There's like a lot of ideas here with no follow through, is what I'm seeing.
There's nothing.
Just from an operation standpoint, I've run operations on many companies and in the military, and to me, this is a lot of ideas and no execution. So like whoever is the CEO, whoever is the COO, whoever's running this thing, there's a whole bunch of people sitting around a table saying, give me ideas. What's some cool things that we can do? And when it comes to actually putting the nose to the grindstone and getting the stuff built and launched, none of it is happening.
I see an FDV of $92 million. For what? Like, what does this actually do? I don't see the there.
So far, nothing.
A big red flag, and the reason why I wanted to run through Cubic and Quant is these coins I always see get mentioned in the same breath as XRP and XLM. And so, we know quite a bit about XRP and XLM, and there's no value capture. So when I think of Cubic and Quant, I think of them in the same vein as XRP and XLM, some type of no value capture coin. And a $92 million FDV, that's really, really big for there to be nothing going on. I mean, we just tried to take
and highly inflationary.
Yeah, highly inflationary. Like, I'm just trying to figure out, like, how can I actually do anything with this? Like, what does it do? Because all of these things, like, maybe there's a meme coin, okay, a cute cat named Matilda. Okay, where's the website?
I like me some little meow meows.
The website doesn't even load.
Yeah.
Like this, I don't know, man. I'm starting to think scam. I smell some scam going on over there.
Well, just the fact that it's been around for 2 years, and the only thing that's really live is a DEX that has
Nothing.
activity on it.
Yeah, so I mean, community. Okay, careers. Are they hiring? See open positions. Of course, marketing. Right. Let's hire some marketing people. Yeah, we don't need engineers. Let's market the thing. DevOps engineer, learn more, apply. Okay. So about Cubic, yada, yada, yada. Good to know. How much do you pay? It looks like they don't pay you. they're not going to pay you.
They pay you in Cubic.
Right. Yes, exactly. So, I mean, dude, like, this is an F. This is an F, man. This is a total fail. Because
definitely a D. Definitely a D.
I mean, dude, like, it's got all the hallmarks of a scam. I'll put it that way.
Somebody put some spit and polish on, kind of the customer facing stuff. Like the website, is clean, it's smooth. It's that all looks good. But as soon as you start peeling back the layers, like we just did, to me, it just started feeling, I don't want to say scammy, but it started feeling very, kind of like those fake sets, like in Hollywood, where it looks like a city. Like, in the front, it looks like a bustling city, but behind it's all 2x4s and, just holding up, facades. That's what this felt like.
Yeah, it's like you're walking through one of those Hollywood sets for like an old timey Western town.
Yeah,
and like
and as soon as you step through a door, it's nothing but like 2x4s propping up, freaking facades.
Yeah, it's a facade. Like this Matilda doesn't even exist, man. Like you can't even go to the website for that thing. It's not real. It's a fugazi. There is no there.
Well, in that whale watcher thing, it looked like it just sent you to their an X profile.
Yeah, it's like, so those are the hallmarks of a scam, man. Like, this is not good. Grants program. Okay, great. Maybe. I'm clicking. There's no there.
What about the incubation program?
Incubation? Oh, no, can't click on this either. I'm clicking, man. There's nothing.
Dude, sorry to anybody out there that's bullish on this, but hard pass for me.
Hard pass, man. And not just hard pass. Like
D minus. Because you gave it an F, I gave it a D, so D minus.
Okay, so here, tell me about the founding team members behind the Cubic crypto project. Who is building this thing? Like, who are the people behind it?
Yeah, no, that's one that me and Jeff, when we started doing deep dives with DeFi crypto and airdrops, was one of the things that we always looked at was the LinkedIn profiles, what projects, have they been a part of in the past? Were those scams? Did they end well? Were they successful? That's a very powerful thing to look at.
Okay, so this looks like the creator is a guy named Sergey Ivancheglo, and his alias is "Come from Behind." Fucking name.
Good Lord!
CFB. So apparently, he's one of the most legendary and controversial figures in early crypto history. Founded NXT and IOTA.
Okay, so I remember Next.
So wasn't IOTA like a scam? Didn't
Wasn't IOTA supposed to be like the new internet, like the Web3 internet?
I mean, bro, here's IOTA, like, okay, trading at its all-time lows, and NXT.
I forget what next was, but it disappeared and went nowhere.
Yeah, so this is, I'm not sure that this is the right token. This is
I don't think so.
NEX. That's not.
It's the next token, is I think what it was called.
Well, I mean, here's IOTA. I mean, like, I remember this one from 2 bulls ago, back in 2021. I remember people talking about IOTA. Basically, if you invested in this, your money turned into IOTA. Your money turned into zero. I mean, yuck, man. So yeah, back to this guy Sergey. It looks like, yeah, man. So who's the dev team? There's these people are not doxed. The head of core development is a guy named DCAT. The tech lead and core advisor.
A huge red flag.
Huge red flag.
If you're supposed to be a team that's building out, a DeFi protocol and dealing with money, things like that. If you're a serious project and you're not willing to put your name on the project, that is a serious red flag.
Huge red flag. So the website and all of that user interface stuff, that is a huge, huge red flag, because you can't use it. Most of it doesn't work. You take a look at the token, down only. You take a look at the project that the founder created previously, IOTA, down only on the token. Like, this doesn't look good. In fact, Mike, I give this a grade of F. I think that this is a scam. That's what I think it is.
Yeah, IOTA was engineered around a single core vision, serving as the primary transaction and data layer for the Internet of Things, IoT, and the machine-to-machine economy. So, yeah, basically internet.
Yeah, I mean, so I gave it a grade of F because, obviously there's no there. So Cubic gets a node grade from me anyway of F. Because I'm actually kind of convinced that this is some type of scam. Quant, I mean,
like I said, I'd say C or C minus, just because I see that there could be potential, for token holders. It definitely has not gotten the traction that it needs to convince me to buy it. I actually used to have a bag of quant because I used to hold XRP, XLM, HBAR, Quant, all the ISO 20022, because I was listening to channels like, Good Evening Crypto, is Good Morning Crypto back then. I was listening to Zach Rector and, all the usual suspects, that, endlessly talk about the ISO tokens. And so I had a huge bag of them. And, credit where credit is due. A lot of those tokens pumped, this last, bull market off of speculation. And I sold into that pump, and I'm glad I did, because they've come back down substantially. So me personally, I'm not. I won't be buying quant. I see way better opportunities with way better tokenomics, way better adoption, and more fees and revenue being generated in other projects.
I mean, probably do a hell of a lot better. Just not probably. You will, I think. And I'm not a financial, I don't have a crystal ball, right? But just buy Bitcoin, man. Like, don't buy Cubic, don't buy Quant, just buy Bitcoin. That's what I would do. Not financial advice. So yeah, man, BTC up at 66K. Hey, so got 4 weeks up. Not bad. Nice bounce. Bouncing off of, and this is a weekly bouncing, just after putting in a trough below that 200-week moving average, now bouncing at the 200-week moving average. So I still continue to believe that Bitcoin will see continued rallies into the end of this month. However, in July of the Bitcoin bear market year, in the midterm year, you see rallies in the month of July, but those rallies fail into the end of the summer. And so if we just zoom in here, where could this rally fail? Well, if it's going to fail, you got to watch that 200-day moving average. So that's all the way up at almost 73K. So could we see more upside out of BTC? Absolutely, we could. We would need to see Bitcoin get above this level here, right there, that level at 67.5. So $67,500. We would need to see Bitcoin break out above that level to get up to the 200-day moving average. But, I do think that we're not quite done with this Bitcoin bear market yet. We're getting close. We're in the bottom of the seventh, if I use a baseball analogy. But I think that the Bitcoin bear market low will come in the beginning of the fall, October, beginning of October. That's where I'm going to start buying, but not before. So, yeah, that's what I got.
All right. Well, we appreciate you all joining us and, throwing questions and, comments at us in the chat. That's always appreciated. We kind of thrive off that here. If you could, please, on the way out, give us a like, give us a, subscribe and share this out. We're genuinely just trying to, grow the channel to help educate people. We're not here to, fleece you. We're not here to shill anything, projects. We're not here to shill you any products we give, pretty much everything away for free. So if you could help other people find this so that it hopefully can help them avoid a lot of the mistakes that a lot of us made, in this, getting into the crypto markets and, save them the pain, help onboard some people properly, into these markets and not get taken advantage of by, people that are, hyping projects because it gives people endorphin hits and it gets them views. And, so a lot of people, unfortunately, are into this, and we're here to make money, but we're going to do it ethically. We're going to do it with integrity. And so, if you could, please help us grow. We appreciate you. And until next time, Veteran Crypto out.
Peace.